Welcome to Satya Skills. In this video, let us learn about some more insurance regulations that were passed in India. Life Insurance Corporation Act 1956. Life insurance in India was in private sector till 1956. To facilitate the government of India to nationalize life insurance business and to establish Life Insurance Corporation, and the Life Insurance Act was passed. On January 19, 1956, the government of India nationalized life insurance business in India. In June 1956, a bill was passed in the Parliament and Life Insurance Act 1956 was passed, facilitating the establishment of Life Insurance Corporation of India. Since then, life insurance is regulated by Life Insurance Act. The Act eliminated private ownership of life insurance business and gave necessary provisions relating to the establishment of Life Insurance Corporation. It also gave provisions relating to its constitution and structure. The Act described the capital structure, functions and also powers and duties of LIC, General Insurance Business, Nationalization Act 1972. This is another important act. Though life insurance was brought under the fold of government ownership and management, general insurance was still in private sector. By passing General Insurance Business Nationalization Act 1972, the general insurance business was completely transferred to the government ownership. The act empowered the central government to establish General Insurance Corporation of India under the Companies Act. Its objective was controlling and carrying on the business of general insurance. Its initial capital was 75 crores. The Act was amended after passing Insurance Regulatory and Development Act. One important committee in this regard, Malhotra Committee. The Government of India constituted a high power committee headed by Sri R.N. Malhotra, former Governor of the Reserve Bank of India, in April 1993. The committee was entrusted with the responsibility of examining and studying the structure of insurance sector and recommend various ways and methods to make it more, it can be say like make a study and make suggestions for a improvement in efficiency and competitiveness. Remember that by that time globalization, liberalization were in full swing. Okay, the committee submitted its report in January 1994 with a series of recommendations. Prominent recommendation by the committee was establishment of a strong and effective insurance regulatory authority and institution, which should be a statutory and autonomous body just like SEBI, Securities Exchange Board of India. After a long discussion and further studies, finally in December 1998, a bill was introduced along with the recommendations of the Standing Committee on Finance, and finally the Act came into force in 1999. Insurance Regulatory and Development Authority Act. Okay, the Act was passed to make the insurance regulation more efficient and to develop insurance sector according to the fast changing global economic changes, especially against liberalization and globalization. The Act empowered government to establish authority to protect the interests of the insurance policy holders. Its purpose is to regulate, promote and ensure orderly growth of insurance sector. Provisions. The Act empowered the central government to establish Insurance Regulatory and Development Authority, and it should be a body corporation having perpetual succession and common seal with powers subject to the provisions of the Act. The proposed authority can establish its branches anywhere in India. The authority is managed by a board headed by the chairperson appointed by the central government. The Insurance Regulatory and Development Authority empowered to make necessary amendments to the Insurance Act 1938, Life Insurance Corporation Act 1956 and General Insurance Business Nationalization Act 1972. Consequently, the recommended amendments were made in respective acts. That's all in this video.